Hello everybody, welcome back to our channel. I hope you enjoyed this little ping test. It proves that these gold coins are real, not fake like the paper gold and silver from the COMEX. And what interesting week in silver markets, huh? Over the last weekend, lots of excitement with Wall Street bets on silver, short squeeze and physical products being sold in incredible volume during the weekend. The trading started Monday morning in Asia, while it was still Sunday in Europe and North America. Silver was already up 7%. Once the European market opened, silver got a boost, going up 12% and breaking the $30 resistance, even though it was just for a short period of time. Then during the New York Stock Exchange trading hours, silver maintained some of the gains but started declining slowly. As we all know, the market manipulation happens in the COMEX. But the most interesting thing that happened on Monday was silver breaking the $30 resistance. This is very significant. Last time silver has traded at $30 was 8 years ago. So $30 is a very strong resistance. We cannot expect to go through $30 as a hot knife would go through butter. I also advised on last Sunday video that to trade these markets we would have to wait for the pullback. I know it's very hard. We use emotions. We believe the price will skyrocket and never look back. But this is not how it works. On Tuesday, the pullback came. JP Morgan downgraded the silver mining sector. Consequently, silver prices had a big decline as well as the mining stocks. But tell me now, how dirty is this game that JP Morgan plays in the manipulation? This is not fair play, so they're gonna use all the dirty tools they have to keep winning. Despite the very bullish fundamentals for gold and silver, the big bankers wanted to play the dirty game and shake the weak hands out of the market. With a massive price drop on Tuesday, the short squeeze silver idea lost momentum. Many retail investors felt the pain of losses, and this is scary for them, for us. The positive side is that more people are waking up for gold and silver, this time not only in the United States but globally. People are learning about currency debasement, and silver is the most undervalued asset right now. For the rest of the week, silver price was choppy. In fact, silver price stayed pretty much flat on the week. But why the silver price is being so heavily manipulated? There are many reasons for that. This week, I watched an interview from Robert Kiyosaki. He believes that one of the reasons for silver manipulation could be the industrial usage of silver. Accordingly to him, silver is used in any solar panel, electric cars, smartphones, and no other metal can replace silver in technology, as silver is the best conductor of electricity. So big industry does not want to increase their price of production. Consequently, Apple, Tesla, Sony, Samsung put pressure to manipulate the silver price down. I like to hear different thoughts, but here's why I disagree with Robert Kiyosaki. A Tesla car costs around, let's say, $70,000. The amount of silver used in the Tesla car is very small, so even if silver prices move from $30 to $100, it will have no impact at all in the final cost of the car. But silver prices measured against gold are increasing, and silver will probably still outperform gold this year. Here we are looking at the silver to gold ratio or gold to silver ratio. So you can see in March 2020, you will need 124 ounces of silver to trade for 1 ounce of gold. Down here, 11 months later, the ratio has dropped to 62 ounces, which is the exact half than what it was back in March, when the price of silver was just $12. So back then, you would need roughly 1 kilo of silver to trade for a quarter ounce of gold. So if you have bought 1 kilo of silver at the $12 price back then, you would have paid $370. Today, you could exchange the kilo silver for a half ounce of gold. In fact, I did that. So that's like paying $370 for half an ounce of gold, or $740 for an ounce of gold if you bought 2 kilos of silver back then. We will see this ratio back to 50, 40, maybe back to 15. Time will tell us. Gold and silver are not perishable commodities, differently than other commodities like orange juice, coffee, or rice that expired if not used in a certain period of time. What I wanted to say is that most of silver that have been mined is still out there in silverware, jewelry, old coins, etc. Once silver breaks resistance, such as $30, $40, $50, a lot of people will rush to sell old coins, junk silver, etc. So there will be pullbacks and strong volatility. At certain price, people will sell their silver objects, which will increase the offer of silver, pushing the prices back down. Also, mining production can increase if the price is high enough. The main reason why I buy silver coins is not to speculate on the price. I don't buy physical silver because of the price. I buy physical silver because of its value. Let me try to explain. CDBC, central bank digital currencies, are coming. With that in mind, the governments will be able to track all your expenses. Governments will know where you spend your money, with whom you spend your money, what time, and they can shut you down with a click. Now with cash, if you hire me to cut your grass, wash your car, or paint a wall in your house, you can simply pay me in cash and the government will never know that this transaction happened. Now imagine the same scenario in a cashless society. Once you pay me for cutting your grass with your digital dollars from your digital wallet to mine, the governments will be able to track this transaction and will charge taxes in both of us. Imagine what countries like Russia and China would be able to do with the political oppositors. So once there is a digital currency and no more cash, when you sell your used bicycle to a friend, the government will know about this transaction and probably charge sale taxes automatically, or any other taxes that they want to charge. The same if you use Bitcoin or a decentralized cryptocurrency. If these cryptos are used, or if they still exist in the future, once you use your phone or internet to pay for anything with them, you will be tracked. This is how important your silver coins and how valuable they will be as soon as the government take cash out of circulation. Now imagine your country are at war or and you have $1 million in Bitcoin, but because of the war, your country has run out of electricity. Your Bitcoin in this case becomes worthless, while your physical silver can still make you and your family cross the border to safety. So this is the value of physical assets. This is the value of silver coins. I use an example of war, but some other events could cause the same problem, like hurricanes, tsunamis, cyber attacks, and so on. But what we could expect for the price of silver going forward? SLV added 61 million shares or 61 million ounces of silver in a single day. Physical silver products are mostly sold out, so how come the prices have gone down? As Peter Schiff and Mike Maloney like to say, the COMEX is like a game of music chairs. COMEX sells 1 ounce of silver for 300 different people. When people start asking for delivery, the COMEX will have a big problem. It's like 300 people dancing around the chair, but when the music stops, only one will be able to sit down and use the chair. In my mind, the COMEX and the big banks are trying very hard to bring the prices of gold and silver down, but in my opinion, they are running out of ammunition as more and more people are buying silver. Please keep in mind, I'm not a financial advisor and you should do your own research before investing in any asset. But here's what I think. I cannot forecast the price of silver for the next week, but I expect prices to increase and break the $30 as soon as the $1,400 stimulus check finally gets the Senate approval. For the end year, in normal market condition, I imagine that silver price could increase 40%, but this is a very conservative forecast. In the event of another crisis like trade war, other pandemic, cyber attack, political instability, financial crisis, or even positive news such as developments on the new green energy deal could push the silver prices much higher. And when the prices of silver start growing, it will call attention of more people, investment funds, and so on. As the silver prices goes higher, combined with the fact that silver is a scarce metal, companies that need silver to stay in business like Apple, Samsung, Tesla could say, wait a minute, I need silver to stay in business. Let's buy a whole lot of silver to guarantee our production for the next 5 years. Then it will be a snowball and you can imagine how high the silver prices can go. Again, as I mentioned before, the way to trade these markets is not chasing the price. You must wait for the pullbacks. At certain price, people will sell their silver products like jewelry, old coins, silverware, plus silver-related stocks. By doing that, the price of silvers will be pushed down. For every $5–10 increase in price, I'll be expecting a $2 to $4 short pullback. Also, if you are trading ETFs, be aware that when financial elites start to feel the pain of financial losses, they can simply change the rules of the game. The elites can halt trades, limit the amount of shares that you can buy, and use a variety of nasty tools to play a dirty game, keeping themselves on the top. From their side, you cannot expect fair play. I know it's getting harder to get physical silver, but to really beat Wall Street, we must buy and hold the physical metal. This will complete the video for today. I hope you like the content. Thanks for watching, protect your wealth, stay safe, take care.